Hello, my name is Karl Hartey. I am the co-founder of Hartey Wealth Management, and what I want to talk to you about are the 6 principles of investing. Number 1 is all about structuring the right portfolio for you and tailored to your needs and not to the needs of any investment company or financial institution. And this is where we take time with each of our clients, understanding what your aspirations, your goals, your values are, and to ensure that we structure the right type of portfolio for you, not just for today, but over the weeks and months and years ahead. As your life changes, so will your portfolio over that period of time. Now, number 2 is the key, or one of the keys to the door to make all this happen, and that's called diversification. What we need to do is spread your money, not just into UK equities or just into, say, European equities or North America. We need to have a global approach, but also to use all of the different asset classes, which is equities, property, cash, gilts and fixed interest. And collectively, that allows us to diversify the right type of portfolio for you. Number 3 is protecting against inflation. Many people say that inflation is high at the moment. In real terms, it's not. We have to go back to the 1970s and 80s when inflation figures were high. But if we have money in banks or building societies earning, say, just 0.5% to 1%, and inflation is closer to 3%, then our money is going backwards in real terms. When we set investment objectives, inflation is important, and so are charges. So we need to ensure, as a target, a hurdle rate of what we need to achieve is to ensure that we get a return greater than inflation plus the charges. And then we're working in the right direction. Number 4 is reducing cost. There's been a lot talked about with regards to charges and fees over the recent years. Full disclosure is important and full transparency. One of the things that we do when we do our second opinion service, which is an audit upon charges, we generally can find that we can save people in the region of, say, 1% per annum upon the charges that they're actually paying. Now, 1% doesn't sound a great deal, does it? But if you have 100,000, it's £1,000 a year. 250,000, it's £2,500 a year each and every year. So it can make a big difference to your overall retiring pot of money. Number 5 is controlling emotional decisions. I know it's much easier said than done because we all hear the news and occasionally we sometimes panic. But if you have the right diversified portfolio, a lot of what's happening in, say, the UK market isn't happening to you. So the key is that when we invest, what we should do is follow the golden rule. The golden rule is that we should be trying to buy low and we should be trying to sell high. And we shouldn't be panicking by selling low in the marketplace and then coming back at a later time and then buying at a higher price. Not a good idea. And the final part, number 6, is rebalancing the portfolio. Here at Hartey Wealth Management, what we do, we review everyone's portfolio on a 90-day cycle. We're reviewing the charges of the portfolios, we're reviewing the performance of the portfolios, and looking at each of the individual fund managers. And if we need to make any changes, we do so. And that is by rebalancing the portfolio. So in summary, what are the 6 principles? The 6 principles is number 1 is structure the right portfolio. Number 2, have diversification throughout your portfolio. Number 3 is protect against inflation. Number 4 is reduce cost. Number 5 is to take care of our emotional decisions, which is not to panic. And number 6 is having your portfolio rebalanced on a regular basis. I hope you've learned something from our short presentation. Thank you for listening.